Welcome. In this video, will Zbcn coin continue to go up? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
An uptrend is a positive movement structure formed when the price continuously makes higher lows and higher highs within a certain period of time. This structure shows that buyers are still in control of the market and sellers are unable to dominate. In order for such a trend to be maintained, the price must not fall below the trend line, meaning it must not break it. This is because a trend line is not just a line, but also a psychological boundary for the market. As long as the price stays above this line, investor confidence remains, buying appetite stays alive, and the market can continue its upward movement. An uptrend line is usually drawn by connecting the price's low points. These lows indicate that buyers do not want the price to drop below a certain level, and that they buy again at every pullback. Therefore, the uptrend line acts like a dynamic support. Each time the price bounces off this support, it moves to higher levels. This shows that the market is progressing in a healthy way. Maintaining the uptrend is especially important for long-term investors. This is because breaking the trend can be the first sign that the market may change direction. When the trend line is broken, it usually shows that sellers have gained the upper hand over buyers and that the price is under downward pressure. However, if the price continues to move without breaking the trend line, it means buyers are still strong, the market is maintaining its positive sentiment, and the upward potential remains. From a psychological perspective, investors feel more comfortable taking positions when an uptrend is present. In this case, since the general direction of the market is upward, pullbacks are usually seen as opportunities. When the price approaches the trend line, many investors buy from this level. This leads to both increased volume and a renewed rise in price. Thus, the trend becomes even stronger. For an uptrend to be preserved, it is not enough for the price to simply stay above the trend line. It must also react strongly each time it touches the line. If the price gives a weak reaction when touching the line, this may indicate that buyers' strength is weakening. However, sharp and high volume reactions reveal that buyers are still dominant. In such an uptrend, price movement usually occurs in waves. Each wave makes a higher high than the previous one, and in pullbacks, it stays above the previous low. This wavy but upward structure shows that the trend is healthy. In other words, occasional price drops are not a bad thing. On the contrary, these drops are necessary for new buyers to enter the market and for the trend to strengthen. The uptrend line is also used by investors to determine stop-loss levels. If the price falls below this line, many investors close their positions. This increases selling pressure when the trend is broken. However, as long as the price remains above the line, the situation works in favor of buyers. Maintaining the trend has a chain effect not only from a technical perspective, but also in terms of market psychology. Each time the price bounces from the trend support and rises, this becomes visible on the chart and attracts more investors. Thus, the market enters a self-sustaining cycle. As more buyers come, the price rises, and as the price rises, more buyers come. Another point to pay attention to for the continuation of the uptrend is volume. In a healthy uptrend, especially in moves starting from the trend's low points, an increase in volume is expected. If the volume is low, this may mean that the rise is weak, and the trend line's chance of breaking increases. However, high volume shows that buyers are strong and supports the continuation of the trend. If the price gets very close to the uptrend line and stays there for a long time, this situation should be watched carefully, because it may indicate that buyers are gradually losing strength. However, if the trend line continues to act as a strong springboard for the price, a new and strong upward movement is likely to start from here. As long as the price continues to move without breaking the trend line, investor confidence increases, making it easier for the market to reach higher levels. Preserving the uptrend is a positive sign for both short-term and long-term investors. This shows that the market's general direction is still upward and that buyers still dominate the market. But we can't make analysis decisions based only on trends. So, Let's look at other metrics as well. Keep watching.
A resistance level is a critical area in the market where the price, upon reaching a certain point, repeatedly encounters selling pressure, causing the upward movement to pause or reverse entirely. This is a level where, in the past, the price struggled to rise and where sellers became heavily involved. Whenever the price approaches this level, investors who have previously taken profits from it tend to sell again, and new investors may also join the selling side, thinking the price will fall from here. As a result, the price often reacts downward from this point. However, the most important feature of a resistance level is that when it is broken, it can completely change the dynamics of the market. When the price moves above a resistance, this is called a breakout in technical analysis and is often a sign of a strong upward movement. When resistance is broken, most of the investors who were selling at that level either leave the market or are forced to close their positions. At the same time, this breakout attracts new buyers into the market. As buying pressure increases, the price can rise quickly. This is exactly what the phrase, "If the price breaks this, it will attack," refers to. Surpassing a resistance means removing a major barrier in the market. The psychological aspect of a resistance level is also very strong. Many investors, based on previous experiences, sell when the price approaches this level. However, when the price surpasses it with strong volume, these investors start to experience fear of missing out and turn to buying again. This makes the post-breakout movement even stronger, because at this point, both new buyers step in and those who sold earlier want to buy back their positions. For a breakout to be strong, certain technical conditions must be met. First, the volume must increase significantly during the breakout. High volume shows that the breakout is real and strong. Breakouts with low volume often result in a false breakout, and the price falls back below the resistance. This is why, for the price to attack, the breakout needs to be built on a solid foundation. When a resistance is broken, in technical analysis, it is often assumed that this level becomes a new support. In other words, the price has difficulty falling back below the level it has broken and often bounces back upward from there. This strengthens the trend and reinforces the positive sentiment in the market. Therefore, after a breakout, the price testing that level and continuing upward is seen as a sign of a healthy rise. Breaking a resistance level has much stronger effects, especially on higher time frames. These levels are usually formed as a result of long-term movements and are areas where big players trade. Such a breakout attracts not only short-term traders, but also long-term position holders, which can make the price move much faster and more sharply. Breaking a resistance also creates a lock opening effect in market psychology. This effect triggers chain buying waves. First, technical traders open positions with the breakout, then algorithmic trading systems step in, followed by investors who follow news flows. This successive buying pressure can push the price to much higher levels in a short time. Breaking a resistance level can be especially critical at the start of trend reversals. In a market that has been in a downtrend or moving sideways for a long time, surpassing an important resistance can signal the start of a new uptrend. This is why such breakouts often lead investors to change their strategies. Above the resistance, new potential targets for the price are usually determined by previous peaks or Fibonacci extension levels. These targets are important for understanding the potential of the move after the breakout. If there are no other strong resistance zones ahead of the price, the post-breakout move can be much faster and longer lasting. In addition, during a resistance breakout, a situation called a short squeeze can occur. This happens when investors who open short positions in the resistance area are forced to buy back due to the price rising in order to cover their losses. These forced buys push the price even higher and strengthen the move after the breakout. Breaking a resistance level is actually one of the most sought-after and closely followed signals in technical analysis. This is because such a breakout often results in a sharp attack. However, it is also important to closely monitor whether the price can remain above this level after the breakout. If it does, the upward movement will continue much more strongly.
The 200 EMA, or 200-period exponential moving average, is one of the most important indicators used in technical analysis to determine the direction of the long-term trend. This indicator calculates the average value of the price over a certain period of time, but due to its exponential structure, it gives more weight to recent data. This makes it more responsive than the simple moving average. Investors and analysts use the 200 EMA as a kind of reference line to see the big picture of the market. If the price is trading above the 200 EMA, it is often an indication that the market is in a long-term uptrend. Conversely, if the price stays below this level, a downtrend may be dominant. The price being above the 200 EMA indicates that, in general, the market is controlled by buyers and that sellers are not yet in a dominant position. This situation gives confidence to investors, especially when in the middle of a long-lasting uptrend. As long as the price does not fall below this average, the overall upward trend is assumed to remain intact. Here, the phrase "progressing with bounces" means that each time the price approaches the 200 EMA, it finds support there and moves upward again. In other words, the price uses this level as a kind of floor and continues its rise by bouncing off it. This indicates that there is a strong trend in the market. In a strong uptrend, although the price makes occasional corrections, these corrections usually end at significant support levels. The 200 EMA is one of the most critical of these support levels. The price bouncing along this level is considered proof that the trend is healthy. This movement also shows that buyers' confidence in the market continues and that investors looking for opportunities step in at every dip. Staying above the 200 EMA also means that long-term investors are keeping their positions. When these investors see that the trend is not broken, they prefer to wait for the price to gain strength from the support rather than closing their positions. This keeps the buying pressure in the market alive. In such an environment, short-term declines are mostly seen as buying opportunities. In addition, the 200 EMA is used as a fundamental element in many algorithmic trading strategies. Especially large funds and professional traders closely follow whether the price is above this average or not. This level is one of the clearest signals for determining the direction of the trend. If the price stays above the 200 EMA for a long time, these strategies generally operate in a buying direction, contributing to the market's upward movement. The price's bouncing movement is important not only technically, but also psychologically. Each time the price bounces off this level, investors gain more confidence. The idea that the trend continues as long as the 200 EMA is not broken is almost a motto in the market. As this belief becomes widespread, buying increases when the price approaches this level, preventing the price from falling. Many professional traders use the 200 EMA as a kind of trend filter. For example, if the price is above this level, they only take long trades, and if it is below, they only take short trades. This is a disciplined strategy used to avoid trading against the market's direction. The price bouncing above the 200 EMA means that only long positions are valid according to this strategy. Moreover, the price's movements around this average often reveal the intentions of large investors. If the price approaches the 200 EMA but bounces strongly upward each time with high volume, it is understood that strong buyers are active in this area. This increases the confidence of small investors and ensures the trend continues for a longer time.
One of the most important results of staying above the 200 EMA is the principle that trend attracts trend. In other words, the longer a trend lasts, the more investors join it. This causes the uptrend to feed itself. Every new correction becomes an opportunity for new buyers and a point for existing investors to increase their positions. However, if the 200 EMA is broken, there is a possibility that the trend may be disrupted. But when the price progresses with bounces, the risk of such a break is considered low, because in this case, there is a strong support mechanism in the market. Buyers step in each time the price pulls back, stopping the decline. This preserves the trend's momentum. In conclusion, the price progressing with bounces above the 200 EMA is one of the strongest signs that the uptrend is continuing healthily. This shows both technically and psychologically that buyers dominate the market and sellers have difficulty pushing the price down. If this structure remains intact, the trend is expected to continue to much higher levels.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.